The crypto market is just absolutely surging. Ethereum is back above 2,500. Solana is pumping. Bitcoin is doing very well. And this is actually the theory which I proposed to you guys yesterday. But I've got a lot more cool things to show you in this video. And no, I will not only talk about altcoins mostly. I will just have to talk about Bitcoin and where things are headed next. Because as you know, I always have some long positions open. And at the end, I'll talk more about the bots and just how beautifully they're working. But for right now, I said earlier, I'm actually waiting for a potential pullback to open new juicy trades. And that's because on many different charts, we saw that the breakout here was destined to go to about 48,000. And on a lot of different exchanges, I think it hit about 47.8 on the exchange in this chart. It only hit 47,555, but still pretty juicy because we were expecting this, I believe, the 1st or the 2nd of February. That's when I first posted this chart. And how you get that target is just from the neckline to the head, something along these lines. But I will tell you that as that's playing out, we're pretty free to go into some crazy frenzy for the entirety of crypto. And what I mean with that is on the short term, right? So if we just consider the last few months, if we breach this, there's literally nothing holding us back. And right now as it stands, if today we continue on this momentum, we have breached these previous high points. And I don't think there's really anything stopping Bitcoin anymore for the short term. Now, if you zoom out, I think this becomes a lot more logical, because what this basically showcases is that every single cycle, you have a roughly 85% correction or so that we've already seen here, but we'll talk about that later. Then the moment that the all-time high is breached, things just go absolutely insane. And that happens a little bit after the halving. Here again, you see a new all-time high about a third into the halving. You could say halfway or so. Before breaking down, in this case here, 85% before going exponential. And once the all-time high was breached, about a fourth or so into the halving cycle, it is pretty quick to go to that new all-time high. Here again, we're down 80% from the top and are right now on a trend to go exponential. And the moment, I think I should actually draw it a little bit more like this here. The moment that we are about a third into the halving cycle or so is logically where we break this previous all-time high, because that's kind of how it looked the previous couple of times, and then make a new all-time high about, I'm gonna say, a little bit here, maybe perhaps the middle, like June or so of 2025. Anyway, but I like to combine it with our earlier theory, and I described this yesterday over on the main channel mostly, that people often think, oh no, it's probably gonna have some more pullbacks. It's not gonna happen. And I will address and say, yes, all times that 45,000 was breached, we didn't breach 60,000 before first coming back towards that level. As you can see right here, for example, 45 was breached for the first time. We didn't get to 60,000. We got below 45,000 before this time breaching it, or rather hitting it. Then going below for a little bit, trying again, once more, broke 45,000, came back, and then the second time it was a go. Perhaps that's the case here again, where we break above 45, actually fall back down. This way you can see it a little bit better before the second time being able to go through. I mean, if you guys remember my buy chart from a little bit ago, I was buying massively at $39.6 thousand because we noticed the CME gap and because we believed it was going to have some sort of pullback before mooning. And that CME gap chart looked like this, by the way, which again, you can clearly see where the support and where the resistances lied, which coincide with the corresponding CME gaps. But so now we're getting into price discovery territory. We've not seen these prices in so long that either our play plays out, where we just talked about the inverse head and shoulder, and so we now get another pullback to below 45, bounce off of that and have ourselves a good go. But because of all the news when it comes to these Bitcoin ETFs actually having inflows instead of outflows, I'm personally thinking that this might just be a lot of institutional pressure now that's leading to people to FOMO. I'm not saying it's real institutional FOMO, as these guys have been consistently buying and some have been taking some arbitrage profits. I'm mostly meaning that we are right now seeing crazy amounts of inflows for these record-breaking Bitcoin spot ETFs. And the way I see it, I think a lot of the world has still got to catch up. And as I stated earlier, a lot of the major funds, they have not joined this game just quite yet. They've still been waiting on the sidelines, waiting for things to mature ever so slightly. They don't care care about being the first. They care about doing things properly and as safe or secure as possible. And to me, it's also really interesting to see, by the way, just how quickly things went, as was described before, the moment that we break above 44.5K, because it took up that liquidity, mass liquidation event, and it just kept on rolling. I mean, the numbers here don't look that crazy, and to some extent, it doesn't feel weird because it was what we expected all along for the whole Bitcoin ETF situation to be a buy the rumors, sell the news event. Again, our normal case scenario was a bounce off of 39.6, and it went significantly lower, but I think it was still a beautiful entry, which is where we open our trades publicly. Our worst case scenario was a $33,000 bounce, because that would have been, let me just quickly show you, a roughly 33 or so % drop from the top, which I think is the average drop, the average correction we see in bull markets. But right now, as it stands, depending on where we get to over the next few hours or so, we could actually be breaking these previous highs. We are basically in the process of doing that and continue on with our little bullish structure. And then it's all about that cap, that 48.6-ish thousand dollar cap. To me, I'm just looking all around 48 because that's where the inverse head and shoulder pattern ends off. Could see a slight pullback before moving on. But the moment that's all broken, it's probably going to be a pretty quick rise. And as I stated, it would not even be too crazy to see $60,000 within like 2 weeks or so. A little side note. A couple of you guys said, Dusty, Deepcoin does not work. If you use the link down below, you've got a VPN on. It might say, hey, you can't use it, but it still works. I'm just trying it here with a US VPN. And again, it might say all this. Most exchanges have to deliver that message. But if you just use the VPN, I believe you'll be able to use everything because I am. And second of all, even if you have this, I'm not so sure if it's not working, but just use a VPN. I've got a link down below to NordVPN, which is the one I always use. And I think most people in America and places like that use a VPN to trade because otherwise, things get hard for you. It might give you a pop-up to do KYC. You don't have to do KYC. No KYC, which means you don't have to verify your ID. You don't have to verify where you live. Nothing, but perhaps you need to use a VPN. Could be. But once more, check it out with the link down below to get the best bonuses and less of a hassle. So make sure you've used the link down below because then we can also do a cool trading competition with only our team. And if you trade a lot, that could be tens of thousands of dollars you just could win for free off of my pockets. Or perhaps the exchange pockets, who knows? Talking about loading up our pockets, let's give it a little look, huh? A lot of you guys said, Dusty, cover these bots less. I keep telling you, you don't need bots. These are just to make life a little bit easier. Because they do the work for you. Here, for example, this bot, as I've said before, has $2,000 in it and is right now in $170 worth of profit, so about 8.4%. As you can see right there, the strategy is still the same. We are being wary of massive crashes, and that's where you potentially have to add margin because that's where this could be flawed. And how you copy this is you go to OKX, you go to this little section that says trading bots, go and press it, or press marketplace perhaps. Scroll down a little bit, you type in right there. You guys can't see, but it's like over on the right here, you type in Dusty. You find my bot right here. You give it a little favorite. You just press follow and it's that simple. I'm doing it on one account as well just to show you. Give me a second. Just go to futures. Let's scroll down here, go to bots. This is again on a copied account. Right here you can see 10x leverage, everything. I think there might also be $2,000 in here. I just started it not too long ago. It's in $40 worth of profit, or about 2%. Yeah, you see this one started almost 2.5 days ago or so, and it's in 2% worth of profit. But again, we're not looking for the highest percentage return. We're looking for sustainable returns. Trust me when I say I can get way higher percentages, but they're way riskier. For example, on Bybit, we put $100 into 3 bots to show you it's very easy. And these are in 27, 20, and 22% profit respectively on, again, $100, which I think anybody could do. This is again over on Bybit. You could check it out with the link down below. And again, to name the example of riskier bots over on BitGet, $700 right now, it's in $100 worth of profit. You can see whenever it was started. $400, $50 worth of profit. $200, $23 worth of profit, $420, $70 worth of profit, $280, $40 worth of profit, and then $200, $16 worth of profit. All in all, definitely not too shabby. And the only reason I keep showing you this is because these things, they just buy as prices go down lower to sell on the upside. The risk you have is that the bull market's over, prices only keep going down forever without any nice upswing, and you don't have enough money to sustain it for a prolonged period of time. For bull markets though, one of the easiest strategies to go for, and if you do not use bots, which is fine, all it does is, like I described thousands of times in these videos, you're trying to basically buy here, for example, once, just get an entry. But then as we get towards the gap, you buy again. As we get towards the next gap, you buy again. Or as we described here, I buy at every single white line and you sell at the top white line. So that would have been like almost right now, basically. So we bought, there was another line I think in the middle that we might have gotten rid of, or it was this one and I just dotted it. I'm not so sure anymore. But you buy once, twice, third time, a fourth time, a fifth time. On every single row, you buy increased amounts. So then as the prices go back up, to sell for juicy gains. And it's been extremely profitable. Anybody who's been following the channel, following along here, has made tons of profit already. Congratulations to you. And I think from here it's going to get pretty wobbly because we're nearing that profit-taking zone. But as a baseline, the bull market's just basically back, right? Institutional volume is ramping up. The sales are basically stopping. This is going to keep pushing more buy pressure. I'm excited.